Hey everybody, Tom Gentile. Welcome to our Monday midday report. Glad to have you here. June 29th, 2020. I got a few things to talk about to you today. I'm going to try to focus, and my focus is going to be in a couple of different areas. We're going to talk about we're going to go through all the particular stocks, bonds, currencies, commodities, and I'm going to talk about really a question that I ask myself, that a lot of people ask me, and that is the bear market back? We're starting to see a lot of action involving potential move back to the downside again. And so we'll talk about that too. I want to dive into Facebook though, because Facebook's the big stock coming into today. That's the one that's getting all the news. And I want to talk about how to play it. All right. Because I went long Facebook earlier today on an option trade. And I want to show you a couple of ideas going forward before we leave today. So we'll do that as well. Finally, let me mention this. So this weekend was my birthday. All right, my birthday is this weekend. I turned 55, double nickels. Number one, I'm absolutely happy to have reached that level. I'm hoping that I continue to move higher up the chain of living longer. This was an interesting one because I got to tell you, if you're like me and my family, this is the first birthday milestone where we didn't go anywhere. All right, it was literally a small cake. Well, maybe two small cakes. A few, immediate family. My mother wasn't part of it. My wife's mother wasn't part of it. This COVID-19 thing, we're staying at home. And we ended up doing a virtual dinner with a comedian. Maybe you guys know him, Sebastian Maniscalco. All right. Those of you that, if you know that name, you know who he is. All right. Fantastic comedian, one of the funniest ones out there. And this is the world we live in now. We live in a world where we have to do things more virtually than live. And so that's what we did. We had a virtual dinner with Sebastian, and that was fun. We had a good time. And so I want to let you know that for those of you that are still staying at home, I mean, I'm on day, gosh, I got to think day 120, where I've literally not gone anywhere, maybe to the store with a mask, but that's it. I can't, we're coming up, we're well into summer now. I don't know if I'm going to be able to get to New York. They may not even let me in. I know I can't get to New Zealand. So, we have to make do with what we got. And so, that's what I'm saying. And I hear you, those of you that are out there dealing with this too. I know that it is frontline news again. Florida's numbers are up. Texas numbers are up. Arizona numbers are up. But, eventually we'll get past this. I'm just telling you guys that I too am being suffered by this because, again, we're all kind of in this boat together. Anyway, guys, let's go ahead and get started. I'm going to move to my outlook for today. Let me share with you a link because I'm not going to be able to get through everything. I did a YouTube video before the weekend, and I was talking about the bear market. So I'm going to rattle through this rather quickly so that we don't have to spend as much time on it. But let me go and share my screen with all of you. And so here we go. We'll get into the bear. You'll see it if you click on the video. It's a 10-minute video on my targets for the S&P 500 and what I'm doing about it. Also, the big news that's out right now: coronavirus. Like I said just a few minutes ago, it's now coming. It's front and center. I mean, that's now the topic with most media and news. All right. So that's something I want to mention. All right. And then finally, we have, the U.S. officials warning again, window is closing on containing coronavirus. Obviously, that's a that's a big piece of news as well. So we're going to tackle all of this here in the next 20 odd minutes. All right, so let's go ahead and start. And let's go ahead and start with, I think I want to start with really our topics that we get into, the dailies. All right, so SPY, TLT, UUP, USO, GLD, BTC, and then we'll get into bear market. We'll get into Facebook. Let's slide to the left, slide to the right. Here we go. SPY. Boy, I'm having a good day today, guys. What can I say? Okay, so here's SPY. We are up on the day. I mean, if you take a look here, we're trending up. This morning we dropped down into what I like to call new lows. I mean, 29.88 on SPY. We've gotten as high as about 30.32. Again, really, really wide numbers between highs and lows. You really, you don't have to risk much with the volatility in the markets and the way volatility is playing these days. But if I jump over to SPY, which is the ETF for the S&P, same thing. I mean, we hit new lows that for the last couple of weeks. We hit them this morning, right after the open. We've climbed out of that. But again, we'll get into let's see where we go from here. Move in just a moment. All right. I've got a support level right here around, I want to call it, let's call it 298. 298 is support from back at the beginning of June. We haven't hit that level. You got to look at June, and then you got to go all the way back into May, into Memorial Day weekend. And we're coming back upon those numbers right now. All right, so that's what we're seeing happening with the S&P. If I were to move forward, let's take a look at TLT. You can see TLT's numbers continuing to stay at or above the 165 level. Now, I'm full disclosure here. I am long TLT with some call spreads between the 160, 165 area. All right, 160, 165, meaning I've got a 5-point spread on right now. I think I paid 2 for them. And I'm trying to get out of them for 4 points, right? So I'm trying to double that up right now. But if we remain above this area, and I like where we are now, because even though the market's up, this thing is not dropping like a stone, which tells me the bond traders are not entirely convinced that the stock market's gonna rally this week. All right, even though if we're gonna get a rally, it's gonna happen toward the end of this week, maybe Wednesday, Thursday, as we head into the holiday. All right, but I think it's going to be a short-term rally, and I think the market's going to prove us to the downside afterwards. Again, a lot of that information for those of you that are just coming in here, a lot of that information I'm not going to be able to get to. But if you click on this link, this YouTube link, about a 10-minute video where I discuss why I have this market heading lower and what you can do about it. All right, or at least not what you can do about it, what I'm doing about it. Let's put it that way. All right, so TLT, UUP, the cash market. Cash dropped a little bit this morning and has rallied back, but you can see here we're caught in between the resistance above 2650 and the support below 2575. You take a look at oil. Oil is pretty much doing nothing. This is going to break one way or another, guys. Look at the oil markets. I'm actually going to look at the last 20 days because let's get rid of all the noise and let's look at what's going on right here. So if we go into oil, 2, 3, 4, there's oil. You can see what's going on here. It's got resistance from last week just below 29.50. It's got support from 2 weeks ago below 25.50. But what's been happening is, if you take a look at, say, the 40-day chart, what's been happening is the highs are getting lower and the lows are getting higher. All right. More importantly, we're running into resistance up here, but then we're starting to see climbing support. And so what's happening is oil is consolidating right now. It's going to break. It's either going to be breaking above 30. It's going to be breaking below 25. That's the loose numbers that I have right there. And that's the direction I would want to go with USO. All right. Oil's either going to tighten up or it's going to loosen up. And the hard money to make is in between those areas. All right. It becomes a little easier if you sell the support or buy the resistance levels on oil or USO. GLD. Yeah, again, probably, I mean, outside of the stock market, this is the safest place to be right now in terms of looking for a dollar to continue to get printed. This is the safest commodity out there. I mean, we've had a little bit of movement, but it's been, and I think I said last week to all of you that I sold some put options at around that 165 area. Well, guess what? They didn't get assigned because we ended up closing at 166 half, and we're at 166 half right now. So I'm more than likely going to go in and sell some more today. Sell some more puts to try to get some more GLD. Sometimes I get it, sometimes I don't. I'm okay with that. I'll keep taking the paycheck every week. So GLD again, longer term. Here's the resistance level right now is down around 158. Support level, support level 158. Resistance level, we're on it. All right, we're hitting multi-year highs as we speak. I've got 175 as my target on GLD. All right, so there you go. That's GLD. Let's move into the intraday numbers. And for that, I'm going to turn on and toggle on, should have had this on already, the big orange pointer. Let's go to intradays. Intradays look like this. S&P is above its first hour high, as you can see at 302.38. It's nowhere near its first hour low at 298.93. But when you look at the other internals, what do they say? All right. Bonds, which were 5 minutes ago down in the red, have come back. Again, the bond market right now is not convinced that the stock market is going to just keep going up. UUP is convinced that the stock market is indeed going to pull back because UUP is now up today where it was lower. People have been buying the cash market this morning. And USO, well, USO is on highs today, right? Trading just below 28. But it too, after having a little brief movement above the area of the first hour high, has started to trade a little bit below it. So there's a little bit of indecision between bond traders, cash traders, and oil traders that the market is not. Everyone's not convinced the stock market is going to rally today. GLD, well, GLD was trading at its first hour highs, pulled back a little bit, now starting to make a run again. And if we look here, this is the number we're looking at for GLD. You got to go all the way back to last Wednesday, and you can see 166.99 is the level of resistance, all right, which that can be taken out in a day. All right, so that's that level of resistance multi-year high that we're seeing right now for GLD. All right, let's look at one more. Let's take a look at now. I'm actually going to go to the futures markets, and I'm going to look at the futures market for BTC, Bitcoin, because Bitcoin had a pretty bad day on Thursday or on Wednesday and Thursday. So Wednesday, we're trading in the $9,700 area. All right, that was Tuesday night. By Thursday morning, we dropped down to 89.85. Now, since then, what's happened? As I kind of move along here, you can see we jumped up to around 9,300. Once, twice, 94. All right, this was it Friday afternoon? And then, of course, we dropped in again down into the low 9,000s. All right, and where are we at trading right now? Well, you come into this morning, 90.50. Now we're at 91.75. So they're trying to buy this thing back, but still down $45 over the last 24 hours. All right. I like the 9,000s as a great area to be a buyer of Bitcoin, right? But also when we get up into that 9,700 area, that's a great place to start taking some of the position off if you want to trade Bitcoin and not just buy it to own it, right? So that's stocks, bonds, currencies, commodities, gold, and crypto. All right. What are my targets on the S&P SPY? If we go back to SPY, and I'll just give you some quick targets here. So let's go to the daily chart. All right, here's our daily chart of SPY, and I'm going to bring us right into what's happened since the lows of April. The lows of April, 218.26. The highs just recently, around 323. Now we had a drop, a really hard drop that brought us down here into around the 296, 297 area. Okay, so we got real close to that this morning. That's not my target. My first target is down here in the 280, 270 range, because that's where we were back around mid-May. All right, you got some double bottom support down here just below 272. Then we see the lower targets, and I'm going to leave those alone because we're nowhere near those right now. But my target area right now is the 270 to 280 range. If you want to know more about it, then click on that link that I gave you. Let me throw it out there again. Just click on that, pause it, and hold it. Take a look at that and see what you think. You can see all the reasons why I believe we're going to have some more bearishness in this market. All right. Plus, what did I hear this morning? Did you guys hear that remdesivir drug is going to cost $2,400 for a 5-day dose per person? Who's going to pay for that? I'm very curious to see when that comes out, how that gets allocated, who pays for it, right? And I'm not talking about who pays for it for people who can afford it. I'm talking about the majority of Americans, all right? Who's going to pay for this drug? I think that might cause a little bit of concern in the markets as well. Regardless, all right. So that brings me to the final topic, and I want to get to it quickly because it's going to take me a little time to go through this, and that is Facebook. All right, FB. Facebook's in the news. Obviously, Facebook's in the news today because of a lot of the advertisers, big advertisers that advertise on Facebook, are pulling out of advertising. Now, this is what, if you look at the news, and let me see if I can give you a news story on Facebook. Hang on a second. I want to make sure I Google it properly. And I'm really interested in news, not how to log into Facebook. Here we go. So this is what we're seeing. You take a look at the news on Facebook. Facebook ad boycotts have entered the big leagues. Now what? Facebook ad sales hit as Starbucks, Diego, bail. GM weighs a plan whether they're going to advertise or not. No one's buying cars anyway, guys. Don't worry about it. Facebook analysts don't see. This is the one you want to see. They don't see major long-term risk from boycotts. That came out an hour ago. By the way, that was Bloomberg had that article. Hang on. Let me walk to the other side of my office. I can't bring the camera with me. Where is it? That actually came out at 10:37 this morning on Bloomberg, on the Bloomberg terminal. And if we were to look at a chart after 10:30 on Facebook, let's take a look at that. So now you can see, here's where it opened. All right, take a look at the 5-minute. All right, so here you go. So Facebook opened in 5 minutes. It was on its low at 207.11. All right, now come on forward here. Here's 10:30. All right, and you can see here, this is when the news broke right here after 10:35, and you can see Facebook was trading around 214. We ran up, we ran back down. Now it's running up again, and lo and behold, Facebook's up today. You know why? Because a lot of people saw this as a buying opportunity. And I'll tell you why. Facebook's not going to lay around and play dead on this issue. They're going to come out and they're going to say, okay, they're going to come out with an apology tour, okay, one way or another. And this will, and Facebook's such a big company. I mean, the progressives use this. They use this as a platform. So whether they like Facebook's rules or not, they're going to continue to use it as a platform. And advertisers, all they're looking for is Facebook to come out with some sort of acknowledgement, on their feelings about systemic racism. And the stock will bounce back. It's bouncing back right now. When I saw this happen this morning, I immediately jumped in and said, I got to take some sort of an option trade on it, even if it's short term. So I'm going to show you a couple of ideas. Let's go to Facebook. All right. So, by the way, can I do a poll on here? Let's just check and see. Let me see if I can do a poll today. I couldn't do a poll last week. Okay, your outlook on Facebook over the next few weeks. Higher? This is just going to be an easy one. Lower. Create. All right. No, it's not going to let me do it. All right, here's what I'm going to do. You guys are on the chat. I can see your chats right now. I can't look at them while I'm in here painting pictures, but I can see your chats right now. So you tell me, where do you see Facebook by mid-July? Higher or lower than it is right now? Sherry says higher. Zach, higher. Keith, steady. Sergio, higher. Joanne, lower. Glenn, lower. Amy, lower. LS, lower. So now, who's right? We don't know, but I will say this to all of you that are watching right now. This is what makes a market. You can't have everybody saying higher, because if everyone said higher, this stock would be up here right now. But there's higher, lower, steady. All right, so let's do 3 option strategies for each of those, okay? Let's do a higher. Now, what you're going to see is you're going to say, oh, Tom's just going to say buy a call if it's higher, buy a put if it's lower, and don't do anything if you think it's going to go steady. No, not going to do that. You know why? Because you're not looking. You need to be looking at, this is a price chart. Everybody can see this. You need to be looking at, and I have this on my tools. Let's look at the 7 to 30 day at the money implied volatility. This is what the option traders think. You see that number? You see that? You see that big move? That means option prices are high right now compared to where they were. Compared to where they were 2 days ago, compared to where they were 2 weeks ago. All right. So the prices on the left are the stock prices. The prices on the right, these are the option traders' implied volatility of the percentage of where they see Facebook going. A couple weeks ago, this thing was down at a 30. Today, it's above 50. What that means is that as easy as I can put it for everyone, it means that option prices, that time value on options is now up much more, okay? We're going to say it's up 60, 70% from where it was a couple weeks ago, okay? So, again, you can see here. Now, let's go through and let me show you a couple things. Let me show you a couple other charts. So I'm going to go to the stock chart. I'm looking at Facebook. I want to show you a couple other charts. Let's look at all the IVs on Facebook. All right, this is all options implied volatility, which we're only looking at the last 40 days. 33 up here at 51, but I want you to pay attention. The red line, the short term's high. Look at the longer term. All right, the 30 to 60 day options are trading around a 49 vol. The 60 to 90s are at 43. The greater than 90s are at 43 also. So if you're long term, you're dealing with a different level of option premium than if you're short term. All right. Now, other things I want to talk about. All right. So let's look at some different chart types. I can look at stock volume. Down here I have all the other charts. Here's a MACD. MACD shows Facebook being bullish. Bullish since when? Mid-June. All right. Bollinger Bands. Now, this is just giving us a level of statistical volatility, which is getting high. That's what all that movement's related to. RSI is neither overbought nor oversold. It's sitting right in, it's not right in the middle. It's a little bit overbought compared to what's going on in the last couple weeks. All right. But let me show you some other charts that you may not be looking at. I like probability cones. Probability cones give us an idea of where Facebook is, its probability is likely to sit. All right, so we have a couple different standard deviations here. All right, sitting in the cone is the high probability. This red cone is the 68% cone that if you look out 20 days, down here to 20, 20 days, there's a 68% chance Facebook is going to be between 190 and about 250. There's a 95% chance Facebook's going to be between 163 on the low side and 282 on the high side. All right, so that's 20 days out, and this thing gets wider as we go. All right, so you have to look at that and you have to say, all right, if volatility is high, then what can I do? All right, let's get into it. All right, and I might be a few minutes over today, guys, so just hang out with me. All right. So if you take a look at some option trades, we're going to go right to some option chains on Facebook. Now, let's look at the July 2nd options that expire in 3 days. Is there anything we can do here? All right, let's take a look and see. So I'm going to update this, and I'm actually going to go 20%. Now, this 20 over here is 20% above and below Facebook's current price. All right, so here we go. Now I'm looking at the stock, which is trading now. It shows the stock at 215.81, but that was based on a 12 o'clock price. All right, take a look at where Facebook is right now. It's at 217.22. All right, now at the top of the hour, we were trading. We had a print in the 215, so this thing's moving around quite a bit. All right, so we see that. All right, all well and good. 217, we see that there. And so with Facebook at 217, what are the strikes looking like? All right, so come on down. The calls, 215 calls, $5.58. That thing, this means if I buy this call option, Facebook has to beware by, remember, markets close on Thursday, right, guys? Friday's a holiday. So we have to be, in 3 days, we got to be right here by expiration. We got to be at here's your break even, 220.58. We got to be at $220.58 or above to be at least at break even. We have an unlimited profit potential, but you got to get that hurdle. You got to get $5 above the current price. That's what this shows. All right. What can we do to lower this? How about this? What if, let's go back to the stock and option table once again. What if instead of, I'm going to clear this, instead of buying the calls, what if we went in and did a simple call spread? All right. We bought, for instance, the 215s and we sold the 220s. How much is that going to cost us? And what's our break even on that? All right, so the 215 220s is trading for about $2.38 or $238 for the spread. Now look, our break even is not $220.58. It's $217.38. More than $3 below buying just the call option. What we've done is by lowering the cost and risk, we've lowered the chance, we've lowered our break even. We still have a chance for a double. There's 110% return based on the prices that we're seeing right now. That's an idea. All right. By the way, if you're bearish on Facebook, literally it's the same thing, guys. All right. It's the same thing. You're looking at buying put spreads instead of puts themselves. Now, there's another thing you can do too. How many of you in the room, I'm going to ask this question right now. And I got a little delay, so I'll wait a bit. How many of you in the room know how to sell options, sell puts? Who in here sells puts as an option strategy? All right. Who's doing it? I'm still waiting. Wow, the link is, we're really behind. Or nobody in here sells puts? Is that what's happening? Nope. Yes. Oh, I got a couple yeses. Okay, so selling puts obligate you to buy the stock. So if I really like Facebook at these levels, perhaps what I do, let's go back and show you one more. I would not do this on the sell side. I would not sell open call options, especially if I'm more of a beginner of selling strategies. But in this case, what you do is you would also, selling puts would be long the stock also. But if I were to sell, for instance, the 215s, all right, and I could get $4.78 for them, it would look like this. Your risk graph's going to look upside down. Now you're going to receive the money. You're going to receive the money. You're obligated to buy Facebook at 215. The only way you're going to get that obligation is if in the next 3 days, Facebook is below $215 a share. Look what they're paying you for that obligation, $4.78. But you're on the hook to buy the stock. For every option you sell, you could be on the hook to purchase 100 shares of stock at $215 a share. So I want you to realize your risk on the trade is $21,022. Now, that risk is built in if Facebook goes to zero. How many of you in here believe Facebook is going to go to zero? If Facebook goes to zero, in my opinion, we got more problems than just Facebook. All right. We got many more problems going on in the world more than Facebook. But could it go below 215 by Friday? Sure, it can. But this is a viable option rather than buying the stock. If you're going to tell me, Tom, two choices. Either you buy the stock right now at today's price, at this price, or you sell this put option, which will obligate you to buy the stock at 215, but we're going to pay you $4.78 a share to do that. And by the way, this option goes away by Friday. All right. I sold puts this morning. That's exactly what I ended up doing. I sold puts this morning to obligate myself to the end of this week. All right. We'll see how they go. You guys can watch. You can see what's going on. But you know why I did it? Number one chart that I did that on was not the price chart. No, the price chart looks pretty scary the last couple of days. The number one reason I did it was because of this right here. Implied volatility is giving me an edge. All right. It's giving me an edge. That's what I'm looking at. All right. So that's what I'm talking about, guys. Hey, takeaway as we do all the time. 90% of traders will trade what they think the market's doing, which consistently can be wrong. 9% of traders trade what they see, which is better but inconsistent. And 1% of traders, I like to call them rules-based traders. They do not trade what they think, and they trade what others don't see. All right. That's what we do here. That's what we attempt to do here everything that we do, whether you are here checking me out for the very first time, and some of you are, or whether you are a member of one of the sites that we use, Fast Fortune Club, Power Profit Trades, or any of the other pieces of our premium stuff that we have, or maybe you're part of tomsoptiontools.com, which is our software. All right. Whatever you're doing, realize this. All right. If you're following me, I can't guarantee that we're going to be winners all the time. I can't. Part of trading is accepting loss and knowing it's there. But what we do is we look at rules-based opportunities that are pattern-based, number one. Number two, we look at not just spotting that opportunity, but creating a low risk or a high probability trade. With Facebook, I showed you both. The low risk, looking at spreads, and the higher probability on the put side. But keep in mind, each one has different reward to risk ratios. All right. And then number three, what we basically do is plan, execute, manage. Have a plan going in, have a plan going out. And that's what everything that I do revolves around. All right. Hope you enjoyed this, guys. Thanks again for hanging out with me. I'll see you again same time next week. We're going to actually cover next week. We're going to talk about the holiday. All right. Because we're going to be past the 4th of July holiday. And I'm going to show you holiday patterns. All right, so we're going to hit Holiday Road next week and see what July has to offer for us coming out of Independence Day. Till then, have a great afternoon. I'll see you same time, same channel next week. Bye now.